Good evening, everybody, and welcome. Thank you for joining us this evening. My name is Jillian Holmes. I'm the Manager of Marketing Communications at Larlyn Property Management. After years of hosting live seminars for Board of Directors, Larlyn is pleased to expand their learning opportunities with online client training sessions in the form of a webinar. I believe this is our third one, and third time's a charm. I think we've got our kinks worked out, so ready to jump in again. Due to the size of our audience, as normal, you will be muted. If you have questions, please type them in the area provided down at the bottom of your control panel where it says type message here. We will address as many questions as possible toward the end of the presentation if they haven't been answered already. If we are unable to get to your question before our time is up, they're all being recorded and we'll be able to reach out to you personally to follow up. So I'm going to get started. Our topic this evening is Condo Insurance 101. What is condo insurance and what are your responsibilities as members of the Board of Directors? It is my pleasure to introduce to you our presenter for the evening, Wendy Wildeman, Senior Account Executive with Rogers Insurance. Wendy has been in the insurance industry for over 40 years and with Larlyn for 15. She helped pioneer our VIP Larlyn Advantage program, which has offered superior service and savings to our clients for more than 10 years. We're often asked by our Ontario clients why we work with an insurance broker from Alberta, and the answer is simple, because she's the best. I'm thrilled to have her join us today. Wendy will be referring to a series of slides you can follow along with as she shares her screen, so I think it's time to get started. I'm going to make Wendy our presenter, and we'll see her screen very soon. Wendy, make sure you're unmuted.
I am unmuted.
Okay, you can go ahead then. Thank you.
Good evening, everybody. Thanks for joining us tonight. This is my first experience at doing a webinar. I generally do these sessions in person, so hopefully I speak clear enough and thoroughly enough that you can understand what the message is all about. Again, as Jillian said, we will be able to answer your questions at the end of the session. I guess we'll get started. So what we thought we would do is just start with some basic terminology so we don't come at you with talking to you in a different language. We insurance people have our own sort of insurance ease. So to let you know who we're talking about, you as the insured are the condo corporation that's made up of all the unit owners. We often refer to the boards, although you are unit owners as well. You're still the insured under the policy. We write the policy in the name of the owners of condominium plan and then your 7-digit number. Your insurer is not Rogers Insurance. We're a broker. It's actually the insurance company that actually underwrites the policy, meaning they're the financial wizards that take on the risk should you be subject to a loss or a claim against your liability. Your property manager is the representative that's been hired and employed by Larlyn, and they're the ones that act as your agent, and we deal directly, generally with the property managers. From time to time, we will deal directly or speak directly to boards. We try to be a very hands-on broker in assisting the property manager with insurance questions. If you should suffer a loss, we will appoint an adjuster. An adjuster is typically employed independently from an insurance company, and they're there to collect the information and look at your loss, what's happened, help and assist in rectifying a situation. They will also get involved with contractors who would perform emergency work. They will write a scope for the repairs to be made. It will be presented to the insurance company, and away we go with the claim. In subsequent sessions, we'll delve more into claims, but for right now, we'll leave it at that. The broker, that's our role. We're a middleman. We act on behalf of you as the corporation and as the insured. We go out and market based on Larlyn specifications, the best insurance policy that we can get for the best value. It isn't always the cheapest, but we try to get the best value for your dollar and the best coverage that we can afford. So now that we know who all the players are, let's talk about the law that comes along with the condominium. By province, there's an act. So in Alberta, the Condominium Act is several hundreds of pages long, and it outlines exactly what you have to do by law and how you run your corporation, from electing board members to setting your budget to your reserve fund. That's the law. We have to follow that. The bylaws are intrinsic to your particular corporation. You can modify them in pretty much any way that you would like to, as long as you follow the act. If your bylaws are written to contravene the act, that bylaw is no longer valid. It has to follow the Condominium Act. You may want to include or exclude improvements and betterments. You may want to be able to charge back a deductible to a unit owner if they're guilty of an act or omission leading to an insurance claim. Your bylaws might even go so far to say we're not going to allow dogs that weigh more than 30 pounds. We are a cat-free building. Whatever collectively as a group you want to do. Now, typically when you buy into a condo corporation, the bylaws are already established by a developer. That doesn't mean you have to live with them. It's just fairly costly, and it's fairly arduous in getting a lawyer involved so you can change your bylaws. You have to have a quorum. In Alberta, depending on what you're actually wanting to change, the percentage will fluctuate. However, your property manager would be able to assist you with that. The bylaws are very integral when we're talking about an insurance claim. We'll touch on that a little further on into the presentation, but the bylaws actually dictate what the corporation's responsibility is to you as a unit owner when it comes to the insurance. The plan is registered with land titles. The bylaws, should you have a change or whatever, they have to be passed, but they also have to be registered against the plan. So if someone goes to land titles and they want to pull the plan for their unit, the bylaws will be a part of that plan. They must be registered. You can go to all kinds of time and effort and pass a new set of bylaws, but if you don't register them, they have no teeth. Managers, again, would refer back to your property manager and what duties they have. That's also discussed in the Act. And trustees are in the eventuality that you would have a major loss. In some cases, the threshold for that is about $50,000. By way of the Condo Act, all insurance proceeds are payable to the corporation. However, sometimes there's verbiage in the bylaws that says up to a certain dollar value, could be $50,000 or $100,000. If the loss exceeds that amount, the corporation may choose to employ a trustee, typically a lawyer or a bank, whereby the insurance proceeds would be made payable, or sorry, still payable to the corporation. However, they are held by a trustee for disbursement. When we see trustees, and I've only seen this happen a few times in my career, they're typically a total loss, where you've had a substantial claim happen. We have one right now in Edmonton that we're dealing with. It's a $17 million claim. Just because of the quantum of the loss, it was prudent for that corporation to enact the trustee. Or if you choose to dissolve your corporation. And again, in my career in Alberta, in 25 years, I've never seen a corporation dissolve itself, with the exception of one. And that's when you choose not to rebuild. And again, it's very rare that that happens. So what should be included in a standard insurance policy? These are from the actual insurance policy, and it refers to what we define as a building. Under insurance, we define the building as a fixed structure. I often give an analogy for people that's easy to remember, and that is, if you were able to turn the unit upside down, what falls out is the unit owner's responsibility, and what stays put is the corporation's responsibility when it comes to insurance. The only caveat to that would be how your particular set of bylaws chooses to deal with improvements and betterments. And by that I mean, should, let's say Jillian and I live in the same complex, and I've decided to deck out my unit to the nines, and I dump $100,000 put granite countertops in and maple floors, and I do a lot of, recessed lighting and that type of thing. And Jillian does nothing to her unit. She has the standard basic unit. If our bylaws exclude improvements and betterments, then I would have to insure my $100,000 worth of upgrades under my own personal policy. Jillian, on the other hand, not having any improvements and betterments, she doesn't have to make that change to her personal insurance. So I strongly suggest that whether it be the current corporation that you live in, or if you're choosing to buy into another project, that you know what your bylaws state, specifically when it comes to insurance, because that's probably the most costly section of your bylaws that could come back to bite you. So we have the building, and we also have the corporation's content. So depending on what the corporation has by way of, maybe there's a rec room and we've got pool tables, or we've got gym equipment, we have a lobby and we have guest furniture, that type of thing. We might even have a ride-em lawnmower or something. So we don't want to say we're just insuring the building. We actually word it as property of every description. So the building and contents will follow into that. Another form under your insurance is equipment breakdown. If you happen to live in a building that has equipment that is subject to mechanical breakdown, so if you're in a high-rise and you have HVAC units, you have a boiler in your basement to supply hot water heat to the units, if you've got elevators, you would need equipment breakdown coverage because that particular equipment is subject to a mechanical breakdown. If you live in a townhouse project where you have your own furnace, you're not air conditioned, that type of thing, like a standard house, there's no need for equipment breakdown coverage. The other coverage that you would look to on your condo corporation policy is general liability. This covers the exposure of anybody getting hurt on your property or doing some property damage. So examples of that would be if I come onto the property and the snow removal hasn't been done properly and I slip and fall and I break my hip, I may choose to sue the corporation under the occupier's liability, and I would look for them to pay for my pain and suffering. Property damage would be if a garage door malfunctions, let's say going into an underground parkade, and I heavy on the word malfunction, we didn't run the garage door, it actually failed and came down on my car, I would have suffered a property damage loss, and my insurance company may choose to come back against the corporation for their negligence in causing my property damage. Directors and officers, this should be very near and dear to your heart because your personal assets are exposed when you sit on any board. So the directors and officers liability is mandatory by way of the Act, and basically what it does is it protects you as individuals should you be sued because someone feels that you have allegedly conducted some sort of wrongful act whereby someone has suffered financial loss. So let me give you an example of that. And these are all real life examples. I had one corporation several years ago that was mostly a rental corporation. And that board, and by saying that, most of the units were investor owned and were rented out. The board was seated with most of these investors, and they in their wisdom decided that they wouldn't follow the reserve fund study and they were going to keep the cash in the operating account and keep this corporation very rich. However, the proper maintenance wasn't maintained. Over a course of time, they drove the poor property manager crazy in getting quotes to get the fence repaired or certain things. Eventually, the property fell into disrepair, and when an owner had her unit up for sale, a person was coming to look at it for a second time to make an offer on it, and because the balconies were in such bad repair, when this lady came to look at the unit, one of the balconies actually fell off the building. Obviously, the person that was looking to buy this particular unit turned on her heels and went away. The unit owner at the time, whose sale collapsed, had a case against that board. And those that intentionally made that mistake or that error in not making the repairs, they didn't have any protection because that was an intentional act. However, those that were kind of sucked into it and it didn't go well for them, they were protected and indemnified under the D&O policy. Well, again, there's more on in the presentation with respect to that. What's a unit owner's responsibility? Okay, as a unit owner, the corporation is not responsible for your personal property. So go back to my analogy where we turn the unit upside down. What falls out is yours as a unit owner to insure. Also, if there's any improvements and betterments to your unit, you need to look at that. Additional living expenses means that should your unit be burnt out by a fire and you're forced to live elsewhere, you still have to pay your condo fees, you still have to pay your mortgage, but now you have nowhere to live. Your insurance policy that you buy through your personal broker will pay your additional living expenses for you to rent elsewhere until such time you're able to return to your home. It also gives you personal liability, and that's important as well, because I could go into someone's home and inadvertently do damage, or someone could come into my space and trip over a cord because I wanted to plug in the Christmas tree in a different corner, and they would get hurt. So that bodily injury or property damage would fall to your personal liability. It's probably one of the least expensive insurance policies that you can buy, and I strongly recommend it. The problem is less than 40% of unit owners actually buy condo insurance. The belief is the corporation looks after them. This is probably the slide I want you to pay the most attention to. As a director, this is what you need to do. This is what you need to know your responsibilities are. You've got to attend meetings. You may have in your bylaws, if you miss too many meetings, you're asked to step down from the board because you're not invested in it. You need to assist with the amendments to bylaws. You have to have an opinion about this. You can't just sit there and collect dust and look pretty and go for the coffee. Human rights. Know what human rights are and that you make sure that you don't violate them. There is coverage under the Larlyn program if the board gets sued with respect to a human rights allegation. And a lot of times they're fairly baseless. It may be somebody is disgruntled or feels that their human rights have been violated. However, the coverage that's afforded under the Larlyn program will also defend you even if the case is groundless. You're involved in setting the budget. So you work with your property manager diligently, but you have to make sure, because you're in what we call a fiduciary responsibility or position, because you are looking after other people's funds. So by way of the condo fees that are paid into the corporation, that money has to be budgeted to make sure we can pay the landscaper, we can pay the insurance, we can pay the property management fees. We put enough money away to look after the reserve fund. The next item is reserve fund study. Their law is very clear. You have to have a reserve fund study, but just because you own one doesn't mean you've met the test. You also have to follow it. So when buying a condo, I often tell the story about we bought the condo for my daughter. I'm sure that the poor real estate agent thought I was the condo buyer from hell because I wanted to see meeting minutes. I wanted to see the budget. I wanted to know who the property manager was. I wanted to know that the reserve fund study was not only funded, but it was also being followed. That says to me as a buyer that this board is switched on and they're doing their fiduciary responsibility as board members. If I see there's a shortfall in the reserve fund, or there's issues with the building envelope, or the neighbor next door to the unit that I'm looking at buying has a yappy dog and you've had all kinds of problems and they've been cited because there's not supposed to be a dog in the property, that might not be a unit I want to invest in. So you need to do your due diligence when buying, but you also as a board have to set up that record keeping, which is the next point, to make sure that you know what's going on in your corporation. We have had a recent lawsuit being brought forward that's frivolous in my mind. However, again, these are all non-Larlyn properties, so I want to make sure that I'm not telling tales out of school. In this particular building, there was a problem with the building envelope, and it wasn't reported in any of the minutes, and it wasn't documented anywhere. Everything was done outside of the board meetings. The individual that bought the unit subsequently was then assessed because this issue came about, and ended up with a $15,000 special assessment. Rightfully so, that individual sued the board because they did not address that and make that known to them prior to the sale. You have to appoint your property manager or your property management company, and that's done however you choose to do it, whether it's been by the interview process or whatever. But you know, there's got to be somebody who's switched on, knows what they're doing, and you're all with Larlyn, so I know you're happy. Declare any conflict of interest. So if, say, for instance, you are a flooring supplier in your day job and a condo board member, and we are going to replace the carpets in the hallway, you want to bid on the contract, you need to excuse yourself, and I do mean excuse yourself. Leave the room. Have it minuted that you've left the room so there is no conflict of interest. You may be awarded that contract, however, you should not have any bias or swing in that. Appraisal of the project, it's in the bylaws, it's in the act. You need to get a insurance appraisal to make sure that you've got the property insured to value. That is the #1 problem with any insurance claim. I don't care whether it's contents, someone's house insurance, their unit insurance, or the buildings that we've just recently had a fire here in Calgary. We're just hoping that they're insured to value. You need to have your projects appraised. You need to have the ability to enforce the bylaws. So if someone is not acting as they should and they're disrupting other unit owners, you need to be able to go through the protocol that is outlined in both the act and your bylaws in order to sanction somebody, fine somebody, make them understand that they need to play nice in the sandbox. Elections, there is also an outline of how many, minimum number of board members and how you go about elections, and whether it's by private ballot or show of hands. Typically it's a private ballot. However, you need to go through the election process. The bylaws do the following. They set out the corporation's insurance responsibility to owners, and this is just among other things. They determine how improvements and betterments are dealt with, and they also provide the general liability for the common areas and explaining where the common area stops and starts. We've talked a little bit about this, but fiduciary responsibility, you need to understand. We will not protect you or indemnify you if you are guilty of a dishonest, fraudulent, criminal, or malicious act with an intentional manner. So back to my analogy where this board that decided not to follow the reserve fund, that was an intentional act for those particular board members, and it was minuted. So we knew exactly who was at fault in that situation. They were not covered by the D&O policy. Those that, possibly said, I disagree, or I think we should do something different, they're being sued equally alongside of those other board members, but they received defense under their policy. You need to be very, very well aware. You're highly paid, and I know you're all volunteers, so I say that tongue-in-cheek. Your highly paid position of being a board member comes with a lot of responsibilities. Know them and act within them, and you will keep yourself out of trouble and keep your corporation running smoothly. I wanted to touch briefly, not knowing the audience, I generally at this point have a show of hands, how many people are in a bare land condo versus a conventional condo. Bare land condos get dressed up in two different ways, and a truly operational bare land condo means that we are ensuring the liability for the corporation, however, not the actual structure. So in this wording that is on your screen right now, you see the definition of the unit is the land that's within the monument on the survey or the plan. So it's typically the lot. And when you see bare land condos, the real tip-off for a truly operational bare land is you're not attached or touch your neighbor. You're a single-family dwelling. We have a couple of these in our office through Larlyn, whereby the individual homeowner buys a house insurance policy. The corporation is not responsible for the structure, because as you can see in the insurance section of the bylaws for this particular example, it says the board's going to obtain and maintain insurance in accordance with the Act on everything excepting the building on a unit. So we're not covering this particular unit. Now, bare land condos can also get dressed up and look like a typical townhouse structure. And that's what I refer to as a modified bare land. So we may describe the unit as monument to monument the same way. However, what we do is we put the responsibility back onto the board to cover the building, including the bathroom, kitchen fixtures. And these are actual wordings, by the way. So what that means is the structure that's sitting on that unit of land is actually covered and insured by the condo corporation. And again, typically, this is where you have a bare land, but the actual structures are attached or touching one another, because it's kind of hard to insure half a building. So what's happened is, in their wisdom, they've gone back and said, no, we're going to insure this structure as a whole and make that the responsibility of the condo corp. I'm going to stop there with talking about bare lands. If you have questions specifically, we'll address them at the end, because it is a bit confusing, but most of you wouldn't have an interest in a bare land. So the next questions are the questions we typically get here in the office. Well, because we invite any unit owner or board member to give us a call. We like to see ourselves as Larlyn's risk manager. If I have a question about property management, they're the ones I'm going to ask. If I have a question about, how a certain act applies or that type of thing, they're the ones that are switched on and know that. However, we ask them to use us as their resource when they have an insurance question. That's why they've asked me to help in these presentations for the webinar, because we go that extra mile, and we invite you to ask, because we want to make sure that there's no breakdown in communication when it comes to insurance. Who pays the deductible? The bylaws in most cases dictate this. There will be verbiage in the bylaws that will state, typically they say, if there's damage caused to a unit or the common property that is due to an act or omission of a unit owner, guest, family member, tenant, invitee, that up to the amount of the deductible can be assessed personally against the unit owner. So let that sink in for a second. If you have a tenant and that tenant falls asleep and leaves the bathtub overflowing, and your water damage deductible is $5,000, the corporation can and most likely will assess you as the owner for that deductible. You need to make certain that your personal insurance looks after that assessment, because I don't know about you, but I don't have $5,000 kicking around that I can pay for somebody else's mistake. Volunteers. How are volunteers protected? Well, a volunteer doesn't actually have the ability to have coverage under workers' comp. What we ask is, we have these volunteers are doing board-sanctioned work. And let me give you an example. If you have a committee that wants to go out and plant the flower beds, or set up, change the patio blocks, or do something that's somewhat innocuous, vacuum the hallways, change light bulbs, because they're retired and maybe they want something to do. All I ask is you have it minuted that you let Tom, Dick, and Harry go out and plant the flowers. What I don't want you to do, and this actually happened, I had two older gentlemen decide that they were going to replace the spring in an overhead garage door. That can kill you. We don't want them to take that risk. We want to leave those types of job functions up to trained professionals. The Larlyn program does protect volunteers should they get injured while they are conducting their volunteer work. Directors and officers liability, again, we have talked about this a little bit, but I want to really drive this home. This is really, the third point is probably the best. It's for claims that boards can stumble into unwittingly. And that's a really important thing. You are an unpaid person making decisions, and your job might be, a lawyer, which is great because you'll follow the law, but you might be the Walmart greeter. You might be retired. You might be a convenience store operator that doesn't have that acumen to follow what's going on. You rely on your property manager. She will or he will rely on outside sources, legal, accounting, and give you that advice. However, if you unwittingly stumble into a situation where you are sued, that's what your directors and officers liability is for. It's not for an intentional act. How should unit owners purchase their personal insurance? Well, this is a good one. I tell we also sell personal insurance here in the office, and I teach courses to the personal agents as well. And if I could make a rule here at Rogers that we would not sell you personal insurance without your bylaws, I would make that rule. The bylaws dictate what you are responsible to insure from the corporation standpoint. What isn't insured by the corporation is your responsibility as the personal unit owner. When we go back to the bylaws where we're talking about bare land, an example of where this went horribly wrong is someone came in and asked, not into our firm, but another firm, came in and said, I just bought a bare land condo. No, I just bought a condo. I misspoke. And she sold him a condo policy. What he'd bought was a bare land condo. And if he had had his bylaws, it would have said very clearly in the bylaws that the corporation doesn't insure the building. For 2 years, he sat with no coverage on his structure. He only had contents insurance. And it wasn't until he had a $50,000 water damage claim in his basement did he learn the hard lesson that he wasn't insured properly. So it make sure that you know exactly what you're expected to have for your personal insurance, and make sure that your replacement cost values are adequate. Again, as I said earlier, quite often the biggest problem that we have with a claim is there's not enough values. I don't care if it fits you or it doesn't fit you. If you have 10 pairs of pants in your closet and 6 sports coats and only one fits you, you lose them in a fire, you still should get your 10 pairs of pants and your 6 sports coats back. So many people do value that, and it's at replacement cost. So that favorite Angora sweater that you bought 10 years ago for $100 might be replaced at $200 today. You need to make sure you have enough limits to replace everything that's in your home. We did a quick run through for a lady as an example. She loved to cook. We figured out she had over $3,000 worth of spices in her spice drawer. Who thinks of that? How about your china, your dishes? Everyone thinks of the big ticket items like their jewelry and that type of thing. But you need to be aware of the actual replacement cost. And again, it's inexpensive. It's not my fault. Why must I get my personal insurance involved? If I heard that once, I've heard it 100 times. It's very, very clear in the bylaws. If you are going to get assessed the deductible, you need your personal insurance. If your personal contents are damaged, you're going to need your insurance. I don't care if the roof leaked and it's ruined, you know, your bedspread and painting on the wall. You have no ability to sue the corporation for that, because remember, you are the corporation. We insure the owners of condo plan 1, 2, 3, 4, 5, 6, 7. And that means you are like a shareholder, or the way I like to look at it is you are a member of the family. Mr. can't sue Mrs. So you have no right to sue yourself, because that's what would happen if you brought action against your condo or your condo for your personal content. Again, you need to change your way of thinking. It's not neighbor against neighbor. You're a part of a big family. Oh, what's happening here? Okay, on to appraisals. So one of your fiduciary responsibilities, remember we talked about that earlier, is that you need to ensure that your building is insured to a proper replacement value. It needs to be insured to the full replacement cost. So how do you do that? Unless you've got a building contractor or an insurance appraiser on your board, you need to hire an insurance professional, an insurance appraisal professional. This is different than your real estate guy. This is different than the bank appraisal that comes from the bank when you're trying to get your mortgage. This is a qualified insurance appraiser. And what they do is they go out and they have a look at your building, and they do a quantification of, you know, what type of windows, doors, floor coverings, the roof material. They don't look at it as to the age of it or how it's worn. They look at what would it cost with today's, and we call it present value factor of money, what would it cost to replace that corporation should there be a major loss? And it's very important. We have actually got a bit of a bonus in the Larlyn program when it comes to appraisals, and we've got a couple of slides on that. Here's the benefit of what we call guaranteed replacement cost. What you're seeing on your screen right now on the left-hand side is a building that was housed several cars, 20 units, and 20 families. This is Slave Lake, and this is May of 2011 when Slave Lake fire happened. Now, you'd like to think that this was after somebody had pushed this building down. The amazing thing about this is how the fire left this building. This is how hot it burned. You can't even see, I mean, you couldn't have swept this parkade any cleaner. There wasn't anything left. These poor families lost everything. 3 months prior to the fire, this particular property manager went out and had this project appraised. It was appraised for, as you can see, just less than $3 million. After the fire and the time that it took, 20 units, not only did it take an exorbitant amount of time, it took almost 2 years to rebuild. It was rebuilt at a cost of $5,624,000. Now, when you buy a policy that has a face value of $2.7 million, where do you think that shortfall is going to come from of nearly $3 million? It would be a special assessment, or people would walk away bankrupt. They would have lost their homes and their investment. Under the Larlyn program, we have what we call guaranteed replacement cost. And what that means is that should you have a loss and you have a current insurance appraisal that's less than 36 months old, we don't stop at the face value of the policy. We go to the full replacement cost. So in that Slave Lake picture, that particular policy did have guaranteed replacement cost, and they got the full $5.6 million for that to rebuild their property, which was a huge windfall for those individuals. They did everything right. They insured to the full replacement, but what had happened is the loss was so catastrophic, and being a remote area, all the costs went up exponentially in order to get the buildings replaced. So we give you a bit of a bonus. We let you know that if you give us that appraisal, we will make sure that you get that guaranteed replacement cost. This is huge. It's not widely carried by many insurance companies. In fact, we have some insurers that if we need help because the property is too large and we need to put what we call a subscriber, we need to have another insurer come on board, they won't step up to the plate on guaranteed replacement cost because they don't know what the quantum of the loss could potentially be. So I've talked a little fast, so we're a little bit early on this, so maybe we can get some questions.
Hi there, Wendy. I'm going to turn, I've unmuted both of us, and I've got a few questions that have come in so far. To our audience, keep asking them, and we will get through as many as possible. The first one was, could you give an example of a human rights situation?
Okay. There's a couple that have come out of Ontario, so I'll explain to you. A lady went to the board and she said, I want you to replace all of the hardware in our main area because I've now got arthritis in my wrists and I can't turn a doorknob. I need you to put those levers or the panic hardware in. Well, the board didn't deal with her very kindly, and she went to the tribunal in Ontario and she sued the board for a human rights violation due to a disability. Another one was a ramp. Again, a person became disabled and wanted to put a ramp in the front of their townhouse, and the board fought them on it. And again, this person went to the Human Rights Tribunal and successfully sued the board because they did not work with him to try and help assist him in getting into his unit.
Thanks, Wendy. The next one.
I haven't had. Sorry?
I will stop talking. You go ahead.
I haven't had any human rights violations in Alberta. They have come out of British Columbia and Ontario. If that's any peace of mind for anyone.
Friendly Alberta. The next question is about reserve fund studies. What if the study is crappy? could we use the previous study, which was very comprehensive in outlining the elements, life of the elements, and the costs? The latest reserve study we received is very, very poor.
Well, my advice would be to go back to your original reserve fund study and get that updated. I'm not sure why you would change reserve fund specialists in the middle of a study. It just needs to be brought up to date and up to speed. But as a board member, if you think or know that it's a crummy job, you need to speak up to that, because if the property is not properly maintained and the reserve fund isn't funded appropriately, there could be potentially a lawsuit against the board for not doing their fiduciary responsibility.
Okay, the next one is, if the owners of the condominium are sued, is an owner who is on the board covered under the condo insurance?
Okay, I'm going to not being able to ask questions about the question. Everyone, when a corporation is sued.
Hang on one sec, Wendy. Diane, can I unmute you? I've allowed you to speak. Do you want to try and just test whether I can hear you, Diane?
Hello?
Excellent.
I can hear you.
Can you hear me?
Yes, I can.
Okay.
Can you rephrase your question?
Okay. Oh, I'm an owner, and I'm also on the board.
Mm-hmm.
So if the plaintiff is suing the condominium or the condominium owners, am I protected under the as a board member?
You're protected as an owner. So I'm going to give you a couple of scenarios, and hopefully this will answer your question without getting into specifics. If I slip and fall on the property, I'm going to sue the owners of condominium plan 1, 2, 3, 4, 5, 6, 7. The insurance policy is going to respond to that and defend that corporation because I'm suing the owners of 1, 2, 3, 4, 5, 6, 7. If the lawsuit and the plaintiff is alleging something other than a bodily injury or a slip and fall, and they're alleging something that would fall more into a financial loss, and they're suing the board, and as you have to be an owner to be on the board, so as an owner and as a director, you are covered under the D&O policy. However, if your board is being sued, and you as an owner, and you are not a director, but you as an individual owner are also being sued under that policy, I would suggest that you get your own legal counsel, because that might be for a non-disclosure situation. It might be that you've got a shotgun approach from an overzealous lawyer that has decided they're going to sue everybody and their dog and find out that something's going to stick somewhere along the line. Because you can sue the board, but there might not be any wrongful act. We will defend the board. We more than likely are not going to defend the individual, because the scope of insurance and the scope of the duties of the board do not include that particular individual. Does that answer your question a little better?
Yes.
Thanks, Diane. Thanks, Wendy.
I'm sorry?
Sorry, I was just saying thanks, Diane. Thanks, Wendy. Our next question is, why would a unit owner need to take the bylaws along when purchasing personal insurance? And from what I heard, the bylaws explain exactly what the corporation policy must cover. Therefore, they will also indicate to the unit owner's broker what isn't covered and therefore needs to be included in the personal insurance policy. I just wanted to raise the question for you to clarify and confirm.
That's exactly it. The bylaws are going to state very clearly the obligations that that of the corporation to hold insured on behalf of the unit owner. So if, for instance, in my example where Jillian and I live next door to one another, I've got all kinds of improvements and betterments, she doesn't. Our bylaws state no improvements and betterments are to be covered, then I need to make that clear to my broker when buying my personal insurance to include improvements and betterments coverage, or buy that limit up because I've maybe gone nuts and really tricked my unit out. The other thing that I have to caution everybody on is the deductible. It will be addressed in the bylaws. If there's the ability for a deductible to be assessed to a unit owner, that's where you're going to find that, is in the bylaws. Your broker needs to be aware of that. And let me give you a personal story. My mother-in-law lives in BC. She got notification that she is responsible for any water damage if it emanates from her unit. And oh, by the way, the deductible was $25,000. This 95-year-old lady didn't have $25,000. I had to make sure that her personal policy had enough limits in it that if she's assessed, maybe the washing machine hose fails or something like that, and she's assessed with that $25,000, that she would be able to pay that out of her personal insurance. You have no way of figuring that out without reading the bylaw.
All right, thanks, Wendy. There isn't any other additional questions. We had a few OMGs during some of your examples, which was that was interesting to listen to. So if anybody else has any questions, just type them in, and I'll keep my eye open. I'm going to flip the presentation back over to me, and we can kind of go through our close. Oh, just a sec. What is DNO?
Directors and officers liability. So as a director or an officer of a company, which you are, a corporation, that's what you guys are. Board members are directors of a corporation.
Super, thank you. Oops, I went back to the beginning. We'll just, alrighty. I wanted to share what's coming soon. Now that we've covered basic terminology and condo insurance, condo insurance and your responsibilities as members of the board of directors for your corporation, we hope you will join us again for more. We have 2 more presentations in this series. The next one is coming up April 7th, and registration links are live now on our website, and I have just shared the invitation with our property managers, who will no doubt be forwarding that out to you shortly. The next one will include what happens when you need to make a claim. So Wendy will go through the basic claim process. She'll discuss excluded perils and how to be prepared, as well as share actual claim examples. And then in May, which we will determine a date shortly, we'll talk about how to manage your risk and mitigate losses, importance of contracts, and keeping your insurance costs low, stuff that we're all interested in as board members and unit owners and homeowners. And then later this summer, I'm going to compile all 3 events into a downloadable e-guide that you can read on screen or print out, or however you would like to. So that's coming up, and I want to thank Wendy for tonight and in advance for the next 2 presentations. I think you're my favorite presenter so far, so thank you very much. Our next steps, the presentation tonight is recorded, so if you wanted to share it with some of the board members that weren't able to attend, then you can definitely pop onto our website. You can reach it at larlyn.com/clientlearning, and then choose the webinar and you'll be able to listen to it then. Who to contact for further questions? Your property manager for sure, or regional manager are both valuable resources on your customer service team. Or if you'd like to reach Wendy, you can do so by email as well at WWILDEMAN, Wendy Wildeman at rogersinsurance.ca. And finally, a little commercial for some of our other Learn with Larlyn opportunities. While you're on our website, you can check out our previous webinars, how to read your condo financial statements, and one on condo budgeting. We've also got several ebooks available to download: the role of the board director, the role of the property manager, I combined the condo financial statements and budgeting plus a little bit of information on reserve fund studies into one ebook called 123s of Condo Insurance Financials. And then House as a System was done with an engineer, and it's kind of about the building envelope and making sure you're doing well with that. I see I've got a couple more questions, so let me pop over there and see what they are. Okay. As a condo owner, I experienced water damage inside my unit due to a leaking dishwasher. Is my personal insurance responsible to cover the interior water damage, or is the corporation responsible?
Depending on your bylaws, but typically, and I'll answer this as in what the typical would be. Remember when we talked about the unit and turning it upside down? What falls out is yours and what stays put is the condo corporation's to insure. The sudden and accidental release of water is a peril that is mandatory by the Alberta Act to insure. So if your dishwasher leaked by way of a sudden and accidental event, and I'm not talking about continuous leakage and seepage, but we're going to say it blew a line and you have damage and your floor needs replacing or your cabinets need replacing, that is the corporation's responsibility. I have a lot of property managers, if they're listening, will probably be cringing. However, remember about that deductible. That deductible, if it was an act or an omission on your part and you did not properly maintain that dishwasher, or worse yet, you're the one that installed it, that corporation, as long as it's in the bylaw, that board may have the ability to assess the deductible to you. So if you've had $4,000 or $5,000 water damage as a result of the dishwasher you installed, sure, the corporation's going to pay for it, but they're going to come after you for up to the amount of the deductible.
Thank you. And the next one was a personal question from Diane, who you were speaking with earlier. She's wondering if you could send Audrey, I'm assuming that's Audrey Davis in Edmonton, the answer to the owners who are sued. I'm going to, what I'll do, Diane, is I will share your email address and copy Wendy just to follow up with that after offline. And I think that's it. So I don't see any more.
Okay, well.
Go ahead, Wendy.
If I've missed anything or if you think of something, I really do encourage you to send an email directly. We do also have a toll-free number if you're outside of the Calgary area, and we're more than happy to answer your questions. It is kind of a mysterious thing on how the insurance policy fits into the bylaws and vice versa, but for some reason we've got it cold on our team and we seem to get it, and we've assisted quite a few people with walking them through their losses. I think when we talk about the actual losses, I hope you come back and listen to that, because I think there's no better learning than the actual factual losses. I can make up stories all day long, but actually the truth is much far more unbelievable than fiction or anything I could make up. And that's it from me.
Alrighty, that's it for me as well. Thank you again, everyone, for joining us. The recording will be up on our website very soon, and you've got contact emails for additional questions. And thank you again to Wendy. Like I said, my favorite presenter so far. So good night, everyone, and hopefully we'll hear from you next month.
Good night.